Ladies and gentlemen, Greg McCloskey from ForexLive.com. Today's date is January 29th. The dollar is moving a bit higher against some of the major currency pairs. Let's take a quick look. Looking at the euro versus US dollar on the 4-hour chart, we are testing the low of this swing area. The swing area is defined by a number of different swing lows and swing highs going back in time through this area, through here, here. We did move here and then move to the upside. We returned to this level in trading last week with prices moving within this yellow area here. And trading today, we moved back into that yellow area and are testing the low of that swing area at 1.08038. If we move below that level, we'll look toward the 50% retracement of the move up from this low price going back to October to the high price that we saw in December. Below that is the 100-day moving average, 1.0771. So sellers are trying to make a play, but they need to get below the low of 1.0803 and stay below that level. And then not far away from that, the 50% retracement of the move up from this low going back to October to the high price that we saw in December. Let's take a look at the sterling versus US dollar. It too is making a new session low here, breaking below the low prices from Friday in the process. We do have the 50% retracement of the move up from this December low to the December high. That 50% comes in at 1.26629. If we get below that level, that should open the door for further downside, but with all the ups and downs that we've seen in the sterling versus US dollar over the last month and a half, the price, it's hard to trust any sort of move. We've been below that 50% retracement on a number of different occasions over the last few trading weeks, and the last few times the price hasn't stayed below that level for very long, but we'll watch that level on the downside as the next key target to get to and through to increase the bearish bias. We are moving away from the 100 and 200-hour moving averages. Those are these levels up through here. We'll see if the price can stay below those levels. Let's take a look at the dollar versus Swiss franc, and it has retraced all of its declines in trading here today. What is key off of this chart is that you see all these lows right here around the 0.86059 level. Point them out right here. We had these lows through here, and here, and here. That's a pretty good floor that was developed there at that 0.86059 level. And trading here today, we had two separate hourly bars where the price came down to that level, found support buyers. That gave the go-ahead to push back to the upside. We do have lots of resistance up here against the 100 and 200-hour moving averages. Also, the underside of this trend line here, where we broke below it in trading on Friday, came back up to that level, found resistance sellers against that level, and pushed to the downside. So all that comes in between the 0.8655 and 0.8663 level for that currency pair. We'll see if the price can get to that level and get above that level to increase the bearish bias, or do we find sellers against that level and push the price back to the downside. Finally, I want to take a look at the Aussie versus US dollar. I'll look at the hourly chart for this currency pair, and if you take a look at its price action, again, lots of ups and downs over the last few trading weeks, with the price mostly in between this range right through here. The 100 and 200-hour moving averages come in at 0.6585, 0.6579. The 200-day moving average is 0.6571. So this cluster of moving averages is going to be a key barometer for both the buyers and sellers in trading today and going forward. You can see that the price fell below the 100-hour moving average, just below it right now, but it's trading above and below the 100-hour moving average. If we can continue the momentum to the downside, get below the 200-hour moving average, 200-day moving average, we should see further downside momentum. Also in play is a 50% retracement line. This is a long-term retracement level. If I go back to the 4-hour chart, you see where this is derived from. You go back to this low price in October to the high price in December. The 50% retracement comes at 0.65699. That's just below the 200-day moving average. So getting below that level would also be a key target to get to and through to increase the bearish bias. But dollar buyers are certainly taking more chart control in that currency pair as well. So there you have it. A look at some of the major currency pairs. The dollar moves higher in early New York trading. By the way, it comes despite declines in the U.S. Yields today. The 10-year yield is currently down 5.3 basis points. So go figure, but the dollar is moving higher. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.